Hello everybody and welcome back to the trade recap on the 15th of August on a Tuesday for GU. So let's look at what the price action looked like today. So if I zoom out completely on the 4H, what do we see? We had the daily breaker structure, a massive impulse, and then we have been correctively pulling back all the way down, creating lower lows on the internal structure. And in creating those lower lows, the 4H had to go bearish as well because we had the 4H breaker structure over here, making this the strong high. And obviously for the 4H time frame to pull all the way back for the daily impulse, we had to see that 4H breaker structure to the downside. Always remember there is a reason why time frames or any time frame changes direction. It's in order to facilitate the movement of the higher time frame, right? So if in order for the daily pullback to happen all the way down, the 4H has to turn bearish, right? And once it has mitigated the extreme, there are a couple of things that could happen from here. Either we hold, so this would be the protected low, right? And it could create a new higher high on the daily, and we could see a massive impulse being created with internal structures being created all the way down until we break the high on the daily. And the 4H obviously will turn bullish, and all the other time frames below 4H will turn bullish, and we will see that massive pull up. Or we could stay in the bearish mode and continue to trickle down and break the daily structure, which means that the daily would have turned bearish, and then the 4H is bearish, the daily is bearish, and the 1H is bearish, and then we'll start looking for the pullback. Anywho, so this is where we are right now. So if I were to zoom in on the recent price action, very interesting price action here. What do we have? We have the 4H internal strong over here, right? So this is, and if you missed the explanation on this, do check out my previous videos. I go in depth on this, but very quickly, this was the last internal breaker structure which had the massive impulse, creating this, my internal 4H. We are on the 4H time frame, so this is the internal trend of the 4H swing. And price has been really basically been bouncing within this internal range. Now 4H internal also is the swing on the 1H, right? And we haven't had a price commitment in either direction. So it's basically ranging markets, and typically the month of August will give you these markets because a lot of these banks and a lot of audience do go on vacations, enjoying with their families, and when they come back, we'll pick up the action again. So again, it's a slow month. This is typical price action for the month of August. Extremely ranging market, higher chances of loss if you really don't understand the structure. Ideally, you want to stay out, but if a entry presents itself, an opportunity presents itself, I'm still taking it, right? Okay. So internally, we are bearish, right? Strong over here. On the swing, we are bearish. And what do I see here? Recently, on the 14th, right here, we had a massive sweep of this week low, right? So for the trend to change bearish, this would have had to close below this line, the structure line, the low here. But it did not close below. It wicked it, which means, and it closed heavily, pulling back all the way, indicating that this could be a sweep of liquidity because there are tons of orders sitting obviously over here. And it just went in, took all those orders, all that liquidity, hopefully to fuel the prices upwards, but let price tell you that. So let's jump down to 1 minute. 1 minute, I say, 1H. Okay, so what happened here? Yesterday, towards the news, there was a news here, and massive dump of the price, swept the liquidity, and massive pull up, right? So when the news was created, what did the price do? It went into this POI, the 1H, grabbed all the liquidity above this, and equal highs is a perfect scenario where it should scream out to you there is a lot of liquidity sitting here, because all the retail tailors, I hate to say the word retail tailors, but a lot of strategies use the double top patterns, to dictate prices going in either direction. But it's a classical pattern that you must have heard in the past. But for me, those are screaming points which are ready to get run, and typically they would get run. I would stay out of a trade when it presents itself, and then I see either equal highs or equal lows below right below my stop loss area or right above my stop loss. I wouldn't take it, because my anticipation is that equal highs or lows will get run, which means it will stop me out and then go in the direction that I initially intended. So in this case, obviously, it got swept. Once it got swept, it gave us a chalk at this point here. Once it gave us a chalk, we have this pivot candle that is ready for some action, right? So price can come in and then it could go down. But unfortunately, what happened was price dumped pretty heavily at this point in time, and there was nothing coming up. There was no tag until it dumped heavily and swept us liquidity. So I canceled my pending order at this point in time because these are massive moves. And once liquidity is grabbed from here, I don't know if that grab of liquidity is either to fuel the prices up or to retrace all the way. With that much of money is involved, that it requires a huge sum of money to move the market like this, especially when it came down all the way and then suddenly in the next couple of candles it went up all the way into that area. So I canceled my order. But however, you could have left it over here. This would have been a risk entry. I would have waited for a confirmation on the 15-minute, a double confirmation. But it never gave me an opportunity, and you see, it would have been a break even or a loss anyways. On the 1H, so when price did dump, so it broke all of this internal structures, right? Grabbed a bunch of liquidity from here as well. Once these structures broke, everything above becomes strong, right? So everything is bearish at this point in time. We have the swing bearish, we have the internal bearish, 4H, swing 1H. We have the 1H internal strong, so that also bearish, and the small internal at this point in time before this break happens is still bearish, right? So ideally, you would be looking for sells at this point in time, but again, the way the price kept up, I wouldn't have put a risk entry on this time frame. 1H, you could definitely do so, or look for confirmations, but this is like catching a dropping knife, right? You are anticipating a reversal with that much of momentum coming in, and I wouldn't advise, especially once it swept very strong liquidity and moved like that. When it did sweep the liquidity, of course, it did create a POI, and this POI was created once we did get this break of structure, because until this point, there is really no break of structure. Once this happens, and this happened, now we have the whole story change on us, right? So at this point in time, this becomes your 1H IBOS. So this becomes strong. Give me 1 second here, and I will draw some line here. Yep. As such, there. So this is your strong at this point in time. This also is bearish, so 1H IBOS, and then I would call that IBOS. Okay, so we have the small internal turn bullish, we have the large internal turn bullish, we have the lows sitting over here. The point for both the internals, right? So if you look at this break of structure, the lowest point would be this, and if you look at this break of structure, the lowest point would be this. So we are basically sitting at the same area for both the internal, small internal, and the larger internal structure on 1H. And then the swing obviously is bearish, right? So now we have misalignment of our structure, and ideally you want to trade at least with the larger internal and the swing aligned, or the smaller internal and the larger internal aligned. So you want to have two structures aligned with you and the narrative to make sense before you want to get involved in a trade. Okay, so once it swept all of that this morning, came back in, and that was the push up. It gave us a nice POI over here, right? And in fact, there was an entry model over here also, but we did not get tagged, and I will share that with you very soon on the 15-minute. But let's look at this price action here. So if I were to look at just this 1H chart, what did this do? It broke all the structure, swept all the liquidity. So this is the POI. It came into the POI. It had a reaction, right? So we do expect a valid reaction at this point in time, obviously like that. And then it broke that supply, right? So once that supply breaks, right, we have internal zones over here, because this guy, this bullish candle over here, and you see the wick, this took some liquidity over here at this point in time, right? So there was some level of sweep over here. And then we can look at some entries going into the 15-minute. So once we go into 15-minute, what do we see here? Oh, sorry. What do we see here? We see a massive, let's see, it came down. Yeah, so over here, so it swept the liquidity. It stayed above this all the time. This was the impulse that broke the thing. You could have marked this entire zone as your point of interest, and taken this trade as a risk entry on the 15-minute, because yeah, I mean, there is no confirmation. This would have been a risk entry that you're anticipating for this flip zone to hold and then push up. I wouldn't advise. I would like to wait for confirmation or something better action than this. I mean, look at all these wicks, right? The price has been going in and out, in and out, in and out, and how many orders would have been taken already at this point in time, right? So for me, this was not really something I was of interest, but nonetheless, there was. If you're playing this internal small structure, this would be a valid trade. Anyways, so then what happened? At that, let's go back to 1H and reanalyze. So price went up, closed above, break of structure, came back down, and then gave us a bullish chalk, right? So at this point in time, it had broken structure, the internal structure. It came back, swept all of this liquidity, right? So this liquidity also got swept, and let me mark this out for you. And why is this liquidity important? Because this low was responsible for creating this high. So there is some strong liquidity over here, and it broke structure, right? A strong structure over here. So there is some liquidity which got swept, and then price moved aggressively up. And at this point in time, it gave us a chalk. So once that chalk happens, I drew my POI, and then I go to 15-minute. And then mark my pivot candle over here, and then wait. So price basically came in, took all of that liquidity, which I just marked, right, at that point. And then as soon as it chalked above here, I placed my trade, right? So this broke this, this low broke this low, but this is an inside bar. So technically this would have been it, right? So at this point in time, as soon as this broke, I placed my trade on the 25%, long as so, maybe a pip here. So, and we could have had a handsome trade, right? All over here. Let's see, did it even go? Maybe not, just shy of 2.0. And we would have had a break even, because at this point in time, I would have had a break even, because this was responsible for tagging me in, or actually this high was responsible for tagging me in. And once this breaks, I would have gone break even. I would have survived over here. Price would have shot up, and then once it came here at this point in time where we are, that would have been a break even trade. Looking at price action a little prior to this, when I was talking about, let's go back to 1H, because I will go into 15 minutes also to tell what happened here. When price came back into this zone here, right? Let's go to 15 minutes and see if we did get a confirmation entry. So at this point in time, there was definitely strong liquidity here. So price swept that liquidity, came back in, and in order for my trade to set up, I would have had to see the chalk, right? The chalk would have been at this point in time. So this would have been my 15-minute chalk here. Let me put that here. Right, so, okay, but what happened? So when price broke out of this, this was our last, let's say, supply or demand, right, that needs to fail, because this demand was responsible for taking out the liquidity. And let's see, this for me needs to fail. Price went up, came back in, and went higher. So for me, at this point in time, this demand is done, because this demand did what it's supposed to do, right? It took the liquidity and whoever was trying to push the price on the other side, large funds, whatever it is, were not able to do, and that last demand was able to contain price and keep moving it upwards, right? So for me, that zone is done, because it's done its job. So next, what do we see here? So price went up here. This candle, the 15-minute candle, did break this low, right? So we went up, low, right? So this was a break. Once this candle broke the low over here, there is strong liquidity at this point in time here, right? So when this another push broke over here, it did grab another level of liquidity. And now I'm looking at this demand to fail. Once this demand fails, and incidentally, for me, the chalk is also at the same point over here, right? Price pushed up, came back in, had a sweep of this bearish candles. Let me zoom that out for you guys. So it came back in, and this bearish candle, took out all of this liquidity over here. And at this point in time, if I were to clean this, let me get rid of that. You were able to draw maybe on this right here, this price very nicely came into that zone. 25% there, tag in, 5.6, another pep, 6.6 right here. And that would have been a very comfortable, very comfortable, easy 2R, right? So yes, you could have left a risk entry at this POI, but if you left a risk entry, and that entry point that I created would not have been enough to give you a good risk to reward ratio. Maybe let me check, what did we get? Give me 1 second, guys. Let me see. If you were to put a risk entry, short here, and then you just went up to there. Yeah, you would have made a 1R. Not bad. It was a good POI, obviously, because it swept all that liquidity. So there was definitely some orders, and you would have expected a reaction. But what we just walked through over here gave you a confirmation and gave you a very nice, quick 2R, right? Really stress-free. If you understand how structure plays and internal structure plays and the entry models, there was definitely entry here. At this point in time, where's my crosshairs? Let me see. Yeah, I was not at the charts. I was in my work, attending some meetings, so I was not able to capitalize on this. When I did come back, this was the situation that I found myself in. Like I said, I did place an entry. It did not tag me in. Would have been an easy, maybe not a 2R, but yeah, it would have been a nice trade, but went to break even. All right, guys, so that was the trade breakdown for the 15th. If you got some value, if you liked it, do comment and subscribe, and I'll catch you up next time. Take care, guys. Bye-bye now.